Welcome to this explainer. Okay, I want you to picture this for a second. Imagine tomorrow is opening day for your very first small business. You step up to the front doors, you unlock them, you flip that little sign to open, and you just take a deep breath. You are officially an entrepreneur. The dream is real, your shelves are fully stocked, and you are absolutely ready to take on the world. Suddenly, the bell on the door rings. Customers are actually walking in. Orders start rolling in, the register's pinging, and honestly, it feels amazing. But I have to stop and ask you a pretty direct question right now. Will your new business survive? It's a really serious thing to consider because, despite the incredible rush of those first exciting sales, there's a pretty harsh reality lurking in the background for most new founders. 3 months. Yeah, that is exactly how long it takes for the average new business to completely, totally run out of money. And here's the craziest part of that reality check. They almost never run out of money because their product was bad or because their big idea was a failure. No, they run out of money simply because of a complete lack of business finance knowledge. They were making sales, sure, but they just didn't understand the invisible system that was actually running their company. Okay, let's dive into this. Think of this explainer as your step-by-step survival guide to fixing that hidden system behind your company. We're going to cover 1. Your first business trap. 2. How business money moves. 3. The 4 vital numbers. 4. Why profitable businesses fail. And 5. 3 rules for survival. Section 1. Your first business trap. Demystifying the myth. So, as a new entrepreneur, it's incredibly easy to fall into the trap of obsessing over your amazing products. You just want to make things and sell things. But we have to shift that mindset and start looking at the underlying machinery. Business finance is the operating system used to get, manage, and grow money through strategic decisions. And please hear me on this. Finance is not just boring math. It's not just sitting alone doing accounting in a back room. It is literally the lifeblood of your operation. It's constantly asking 3 massive questions. Where will our money come from? Where should we spend it? And, importantly, will we earn more back later? Get this operating system right and your company thrives. Get it wrong, well, even millions of dollars can just vanish overnight. Section 2. How business money moves. The engine loop. Money in a business doesn't just sit perfectly still in a vault somewhere gathering dust. It moves. It moves continuously, a lot like a living, breathing engine. So let's walk through how this engine fires. Step 1. Investment. This is money entering the business. So maybe your life savings. Step 2. Operations. You're paying staff, buying equipment, renting a space. Step 3. Revenue. Your customers finally pay you. And step 4. Profit. What remains? But hold on, look really closely at the gap between steps 3 and 4. Here is the big twist for first-time entrepreneurs. Earning revenue absolutely does not guarantee that you keep the profit. Section 3. The 4 vital numbers, your dashboard. Now, you wouldn't drive a car down the highway without looking at the dashboard, right? Well, you can't run your new business blindly either. First up on your dashboard is revenue. Simply put, this is the total money coming in from your customers, the top line. When you make those exciting sales on opening day, that money ringing into the register, that's your revenue. And while it feels absolutely fantastic, it's really only the very beginning of the story. Because next we have expenses. This is the money going out. This is the harsh, everyday reality of the costs required just to keep your doors open. We're talking rent, inventory, payroll, insurance, marketing. Every single dollar that leaves your business to support your operations lands right here. Then we have profit. Mathematically, it's pretty straightforward. Profit is simply your revenue minus your expenses. It's what's left over at the end of the calculation. If you sold more than you spent, boom, congratulations, you're profitable. But I gotta tease a warning here. As a new founder, this specific number can be highly, highly deceptive. And that leads us directly to the 4th and, honestly, the absolute most important number on your dashboard, cash. Cash is the actual money available in your hands or sitting right there in your business checking account today. Make no mistake about it, this is your ultimate lifeline. It's not some theoretical math calculation, it is hard, cold reality. The contrast between these two is massive. Profit? Profit looks fantastic on paper. It makes you feel like a total genius. But cash? Cash is what actually pays today's rent and your employees' salaries. This is the crucial cognitive leap that every first-time entrepreneur has got to make. You literally cannot pay your staff with profit. You can only pay them with cash. Now, what's really interesting is Section 4, Why Profitable Businesses Fail, the Silent Killer. There is a monster hiding in the closet that routinely kills new businesses. Let's walk through a quick coffee shop scenario to see it in action. Let's say you invest $20,000 to open up. Your monthly costs are $5,000. Your monthly sales are $8,000. So you're making a $3,000 profit every single month. On paper, you are completely crushing it. You're feeling super great about your entrepreneurial skills. But then we hit the narrative twist, 90. What is that? That's the number of days a corporate customer or a wholesale client might just delay paying you. Think about it. What happens if you sell $100,000 worth of coffee beans to local corporate offices, but their accounting departments take 90 full days to process your invoice? You have incredible revenue, you have massive profit, but your $5,000 monthly rent is due today. Which brings us to this incredibly powerful reality check. Many businesses collapse not because they lose profit, but because they run out of cash. When the money stops moving, the business dies. It truly doesn't matter how incredible your product is or how brilliant your original idea was. If you don't have the actual cash to pay your suppliers and your landlord today, it's game over. In finance, this is known as cash flow failure. It means being highly profitable on paper, but completely, totally broke in reality. It is the silent killer we just witnessed with the coffee shop. Delayed payments drain your working capital, and without working capital, your business engine just seizes up entirely. Section 5, 3 rules for survival, the steering wheel. All right, so we've talked about the engine and we've looked at the dashboard. Now it's time to actually grab the steering wheel. To build your ultimate toolkit, there are 3 repetitive decisions you're going to make to survive. Number 1, funding. Where does the money come from? Do you borrow it, find investors, or tap into savings? Number 2, investment. Once you have that money, where will it create actual growth? And number 3, control. How do you rigorously track your operations to ensure you literally always spend less cash than you earn? Mastering these 3 decisions is exactly what separates legendary businesses from the ones everyone forgets. And that brings us to the finish line of our explainer. Since business finance is ultimately about making strategic decisions and not just staring blankly at accounting spreadsheets, I want to leave you with a challenge. What will be your first financial decision today? Are you going to project your cash flow? Are you going to re-examine your expenses? Take control of your system right now. Apply what you've seen today and go build a business that doesn't just open its doors, but keeps them open for good.